What if everything you've been told about ESG was just a smoke and mirrors game? What if the promise of a greener, fairer world is merely a well crafted illusion and a way to grab power and control the world? A hot topic has been making waves in the finance world. Blackrock, one of the world's largest asset management firms, is under fire. It appears the company is being accused of misleading customers about their ESG investments. This issue is particularly concerning for investors who prioritize ESG factors in their decision making. If the investments are not as sustainable as they are led to believe, it could undermine trust in the entire ESG movement, not to mention potentially harming the reputations of the companies involved. Imagine trusting your money to BlackRock, only to find out that their ESG commitments, promoted as pillars of sustainability, could be masking a relentless drive for profit. Could millions of investors be misled, drawn into believing their investments are creating positive change while the real motives remain concealed? If you've ever wondered whether your investments are genuinely making a positive impact, then this video might hold the answers you've been searching for. So let's get right into it. BlackRock is a big player in promoting environmental, social, and governance (ESG) investing, which is all about putting money into companies that do good for the environment and society. But recently, various questions have been raised about the genuineness of this firm. People have started to question if they are truly committed to making a positive impact or it's just about the profits. The state of Tennessee has filed a lawsuit against BlackRock, claiming that the global asset management leader violated consumer protection laws by misrepresenting its environmental, social, and governance (ESG) investment practices. Accusations from the Tennessee Attorney General allege that BlackRock's public statements are pulling investors in two different directions. So, what exactly are these allegations? Critics argue that BlackRock's ESG labeled funds may not be as environmentally or socially responsible as advertised. In some cases, companies included in these funds have been linked to fossil fuels, poor labor practices, or questionable governance. This has led to claims that BlackRock is engaging in greenwashing, a practice where a company gives a false impression of its environmental efforts. Now, greenwashing is a serious accusation. For those unfamiliar, it occurs when a company markets itself as environmentally friendly or socially responsible without actually making significant changes to back up those claims. In essence, it misleads consumers and investors who truly want to support ethical businesses. To better understand the gravity of this controversy, it's important to take a quick look at BlackRock's story. The company was founded in 1988 by Larry Fink and his partners. It started small, focusing on helping big institutions manage their risks and investments. But they had an ace up their sleeve, a powerful piece of technology called Aladdin, which helped them analyze and manage investments better than anyone else. BlackRock quickly grew, expanding into other areas like stocks and real estate. By 2009, they made a big move by buying Barclays Global Investors, which made them the largest asset manager in the world, a title they still hold today. With over $10 trillion under management as of 2024, BlackRock is not just any financial company, they're a global giant. They control large amounts of money, giving them the power to influence markets and decisions in ways most companies cannot. Now, that's a significant success story. A small startup that climbed the ladder to become the global powerhouse it is today. But one can only wonder what this lawsuit means for BlackRock. The allegations seem pretty serious. The controversy surrounding BlackRock began to heat up in early 2024 when the Tennessee Attorney General launched a lawsuit against the company. The core issue is that BlackRock has been making inconsistent statements about its investment strategies, specifically around its ESG, or environmental, social, and governance funds. But since the lawsuit was filed, there has been an unusual silence from BlackRock. Months have gone by with no official word from the company. The silence is deafening and raises a lot of questions. Why hasn't BlackRock addressed these claims head on? What are they hiding? One possible explanation is that BlackRock may have managed to drown out this controversy, possibly by diverting attention elsewhere. After all, another lawsuit involving Saba Capital has been grabbing headlines lately, which could be overshadowing this case. This lack of transparency has raised eyebrows and fueled speculation about what is really going on behind the scenes. What could BlackRock possibly be hiding? BlackRock is one of the three major asset management companies that hold significant influence over the global economy. Some people, including politicians like House Judiciary Chairman Jim Jordan, believe that these companies use their vast shareholder voting power at major U.S. corporations to push political agendas. This isn't just a conspiracy theory, it's something that's been discussed openly in political circles. For instance, Vivek Ramaswamy, who's running for president, often describes these firms as a cartel. He argues that they're pushing environmental, social, and governance (ESG) policies, like those promoting diversity and environmental responsibility, on American companies. According to Ramaswamy, this comes at the cost of what's best for shareholders' financial interests. But this raises a big question. Are these firms really using ESG as a genuine strategy to better the world? Or is it more about gaining control over companies, and by extension, over global power? Take the example of BlackRock's involvement with Engine Number One, an activist hedge fund. BlackRock supported Engine Number One in getting new directors on ExxonMobil's board. The stated reason was to push Exxon to lower its carbon emissions. But if BlackRock can influence such significant changes at a company as large as ExxonMobil, it's worth asking, could they also sway government decisions? And is that part of why they haven't responded to a lawsuit filed against them over 4 months ago? Bloomberg even referred to BlackRock as the fourth branch of government because of its close ties with central banks. These connections were particularly evident during the 2008 housing crisis, when firms like BlackRock worked closely with the Federal Reserve to help clean up the financial mess. So, is BlackRock merely using its power for positive change, or is there something deeper going on? It's a question that's sparking a lot of debate. The silence from BlackRock is not just a pause, it's a troubling one. A void that raises questions about what is really happening behind the scenes. The truth, when fully revealed, might be more shocking than anyone could have anticipated. Although BlackRock has not issued any official response yet, the company has flat out denied any wrongdoing. In fact, they've stated that their ESG investments are thoroughly vetted and that they remain committed to promoting sustainability and ethical practices. The company has publicly rejected Tennessee's allegations, stating, through media outlets, that it plans to contest the complaint. Despite the lawsuit, the firm expressed, "We are proud of our contributions and remain committed to the future in Tennessee." So, on one hand, BlackRock has dismissed the allegations made by Tennessee Attorney General Jonathan Scimetti, stating, "BlackRock fully and accurately discloses our investment practices and our approach to proxy voting," according to an email statement sent to Reuters. The company has publicly emphasized its commitment to sustainability, promoting ESG investments as a way to support environmental and social causes. But, on the other hand, critics argue that the company is more focused on maximizing profits, potentially at the expense of those very principles. The lawsuit claims that these mixed messages are misleading investors, making it difficult for them to make informed decisions. However, regulators and watchdog groups are starting to take a closer look. Moving forward, expect some scrutiny on how ESG funds are managed and marketed. Investors and regulators alike are calling for greater transparency to ensure that these investments truly align with the values they claim to support. So, what do you think? Are companies like BlackRock doing enough to ensure their ESG funds are truly ethical, or is this just a case of smart marketing? You could drop your thoughts and suggestions in the comments below. If you found this video helpful, be sure to give it a thumbs up and don't forget to subscribe for more insights on finance, business, and the latest market trends. Until next time, stay informed.